Hi, everyone. My name is Jose La Luz Lopez. I am the CEO and founder of Delta AI, a digital bank for businesses based in Latam. I'm here with you to share our views on artificial intelligence and its potential impact on how we see the industry, particularly FinTech for B2B market. Um, I will be using a presentation that I have prepared for you in order to discuss some of the trends that are important in order to understand where do we believe the industry is going to head to. Of course, many of these are only hypotheses that we believe are going to take some shape or form in the future, and I'm happy to discuss further with any of you your opinion, your questions, comments on the matter. You will find at the end of this presentation my personal information, and I will make myself available for you. Um, Before we begin, I'm going to show some of the trends on other industries because I think it's really enlightening to see how other industries came to achieve some sort of critical mass that really reshaped how this industry was perceived and was built around the world. So one of the questions that you might be aware of, it's recently gotten a little bit more of attention, is how long did it take for a particular industry to reach at least 15 million users? So as you can see from my screen, the first one in there is the airline industry, which, if you've been investigating around, took more than 60 years to reach 50 million users. In fact, it was 68 years before it reached the 15 millionth user. How long do you think it took for the car industry to achieve this critical mass? Yes, if you are around the 60 years, you'll be okay. 62 years it took us to achieve 50 million users. When we think about telephone, then we might think that it was faster to reach 50 million users. But in fact, it took at least 50 years for this industry to get into that. Why is this important? Why do we ask these questions when thinking about artificial intelligence and financial technology? Is because it has taken a lot of time before this industry was disrupted. We start to see the first attempts of fintech and even banks to start giving services in a very different fashion, in a way that is more thoughtful of consumers, of their needs, of their time. But still, it seems to be a large gap between what the user need and what we are offering as an industry. In fact, one of the interesting things is how long did it take for credit cards to achieve 50 million users? And we can see that it was 28 years. Now it seems ubiquitous to see everyone with a lot of cards in their pocket and even in their mobile phones. But it took quite a while before something as new as plastic money became the standard of the industry. And when we think about television, it took 22 years for that to happen. If we continue thinking about these trends, we will see that the automatic teller machines, who have been there already for a while, took 18 years before reaching 15 million users. And in here it gets a little bit more interesting because computers took even 14 years. And when we think about mobile phones, it even took to them 12 years to reach this 50 million mark. Then it becomes more interesting when we think about some of the things we use on our everyday, like the internet, even the Facebook, WeChat, or how long do you think it took for Pokemon Go to reach 15 million users? Try to take a guess. And it was 19. 19 years? No. Months? No. Precisely. 19 days. So less than a month before reaching what it took to airlines, almost 70 years. And I'm guessing you are starting to think about the reasons behind these behaviors. One of them might be very, very obvious. But before we reach with some of my conclusions on the matter, I would like to draw a very interesting line that caught my attention. And it's this: computers mobile phones and all the technologies on the right hand side, you'll see that it took less than 15 years to reach 50 million users, as opposed to the other ones, which took 20 and more years to reach this amount of users. However, it is interesting to dwell a little bit on the reasons behind that, and one of them are obvious. Definitely, the population is different. 100 years ago, we had 1.9 billion human beings on the planet, while right now we have more than 7.8 billion. That's a 4x growth in 100 years. So definitely bigger markets can be achieved with higher populations. The more people we are in this world, the easier it is to achieve the 15 million mark. That's definitely one of the reasons. However, I think it's important to keep thinking about some other defining reasons why these numbers are achieved at a higher rate even than the growth of population. One of them, undoubtedly, is the network effect, which is better explained by Metcalfe's law. As you may know already, Metcalfe's law states that the effect of any network, in particular a telecommunication network, is proportional to the square of the number of connected users of the system. This means that the more users you have in a network, the higher the growth of the effect or the value of this network will be, uh, specifically to a square of the quantity of elements within the network. So that basically just means that the more people using the network, the faster, in an exponential fashion, the value or the growth of this network is going to become. And finally, another main reason for these particular effects to reach these amounts of growth is definitely how we are more stick to our mobile phones. Most of the people right now spend a lot of time watching these little screens, just checking for a lot of things. And the reason why we get closer to these devices is because they have substituted a myriad of separate devices that historically used to take a different place in our pockets, in our bags, in our house. I'm talking about landlines, cameras, GPS, answering machines. There's a lot of things that we right now don't even use. Sometimes even the computers are not being used. And the reason is that we can pack a lot of information and a lot of data access just in our hands. So the more the technology is able to interact with even more day-to-day apps, then a separate network effect occurs within our mobiles. So if we go back again to the previous slide, we will see that once we start using devices that can interact with more ways with us, then the period of reaching 50 million users reduces drastically. And I guess one of the reasons why this happens is because we spend more time with the same devices but doing different things. And we can do more things because we have access to more information and we can interact with different needs on a day to day basis. We can use our mobile phone to drive around the city. We can use our mobile phone to send a message. We can use the mobile phone to take a picture, to store, or to send, or to compare, or to search on the internet. So the more activity we can send to these devices, then the easier it is for it to spread around users. So even when we increase this by something as interesting to us as leisure activities like play and entertain, like in the case of Facebook or Pokemon Go, the faster the growth rate becomes. And one of the reasons that is because the network effect, it's even higher because we have more ways to interact and more needs. So we can either send a message, send a picture, send a voice note, put it on the web, put it on the social network, send it through private messages. So it makes the network stronger, and then any application that is more exciting to use will reach any given mark compared to others on a faster basis. And you may be wondering, how is this relevant to fintech and industries in general. And the reason is that with all the increase of these communication devices and different alternatives to communicate and interact with other people, then the institutions and the traditional way to create competitive modes and to create industries start to change and to be challenged. So traditionally, the dominant institutions used to rely in economies of scale. We did study this in school. The more assets you had, the easier you could achieve economies of scale. Well, right now, we can see pretty easily how big industries are controlled by companies that hold no assets, like Airbnb, like Uber, or even Bitcoin. So right now, the scale of data and the scale of communication and interaction with this data is the one that is driving operational efficiency, then achieving economies of scale on data, uh, and and reaching different cost advantages. And this is not the only thing that changed. Also, the mass production was one of the ways institutions could dominate a market because they could produce in a more cost-effective basis products. But right now, there has been a shift towards talent, so towards tailored experience, because people wants to experience differently how they want their services. So the standardization and mass production is no longer something that is enough to address the market. So this is a very important change in the trends on what the customers expect from industries and what we as users are demanding from our service providers. And this is not it. Another big difference is that relationship used to be based on exclusivity and someone giving you access to it, while now it's more based on optimization and matching. We have services that can get you a partner to go out, a partner to do networking, a co-founder for a company. Optimization and matching, it's pretty much what's going to happen in the near term, and we start to see some of these trends right now. Um, Before, some dominant institutions used to rely a lot on high switching cost. It was very difficult for someone to change one of the services they had, like banking, or if they had a lot of miles in an airline, or they had a lot of points in a credit card. Right now, it no longer works like that. Now, users are in search of of retention benefits. It's not like companies creating switching costs to retain us, but they have to create benefits because with the continuous improvement of performance, then the service levels start to reach higher levels. And therefore, it is important for anyone in any industry to start giving away more retention benefits. Um, Next, there was a high reliance on human interactions. Many of the services were given by humans. So the relationship one to one was privileged. Right now, we're seeing a very big change on how everything is becoming on a value of augmented performance, how we can make things faster, better, interplay with different technologies. This is not only a one-to-one human relationship, but is now in effect via performance, augmentation, multi-point access from different devices, everything based on the cloud. Um, so when we think about how these industries that we checked before took a lot of time before getting 50 million customers, and then at some point when we start to interact with computers and mobile phones, there is this clear inflection point in which it takes less than 10 years and then less than 5 years to reach 50 million customers. And on the backdrop of changes on how dominant institutions are built, what could be your expectations for fintech, and why us in Delta AI believe that the future of finance, particularly for businesses, will be extremely tied to the development of artificial intelligence. Well, I think it's worth a while to go and check what is AI and what we understand by it. Um, Although there is not a single definition that everyone agrees on, there are certain levels that are common knowledge on the degree of advancement of artificial intelligence. And I'm going to explain them now. One of them is we can start with pattern detection, which is very close to um, descriptive statistics, in which we recognize trends in data. We get data, we can interpret it, and then start recognizing specific trends within our information and try to tie to any specific statistical functions that can reveal a pattern or behavior or data. The second stage of it is the capability for the information to be understood in a way with models that can create foresight, that we can start creating forecasting, determining the probability of future events. After this, we have a period of customization, which is the capability for automatization and AI to generate rules that can be applied for specific profiles, which are different one to the other. And then the decision making, which is the capability of these rules taken from general data, but being applicable to different specific profiles by the models themselves. And finally, at the top of the level that we can see right now is the interaction with humans in a way that is almost indistinguishable. And in that regard, the ability for the AI at some point to communicate directly with humans through digital or analog mediums. So depending on how we understand this, on at which level of development of the AI we are, it's going to title different impacts for different industries. In fact, what we see right now is just a combination of some of these developments and advancements of technology in our day-to-day life. It could be suggestions on what to eat, suggestions on what to buy depending on our previous purchases. It could be suggestions on what time should we use to leave before work. So we start seeing some of these patterns that are interpreted and then modified into forecast until we start seeing some customization down to the user level that start helping or shaping our decision making. How do we think this is gonna play for fintech and in particular for B2B? And this is exactly where we have been thinking a lot and researching on what do we believe is gonna be the future like. And this is more like a time to start thinking and liberating our imagination and, and start developing ways in which we can envision the future. And in fact, that's how we began at Delta AI. One day we just sat and said, how is this job going to become for the future? In my previous experience as a CFO, I used to wonder for a lot of time how the future was going to replace my position with robots and with automatization and artificial intelligence. And at some point, it just became clear to me that we were the ones who were in charge of creating this new world of digital CFOs. So some of the things that I can imagine are likely to happen, I have listed for you on top of this slide. So when we think about pattern detection on our data, but related to finance, I believe that we're going to start, and we have some of this already for consumer, and we're working hard on having it as well for B2B. But we can start seeing spending patterns. So the systems themselves start giving you an idea on what do you spend on, what are the percentages, how do you split your budget historically. You can see revenue patterns. If you see maybe a degradation of income in some sort of lines of your business, or different client or supplier anomalies, increases in expenditure, percentual increases in some specific lines. This is just a little bit of sophistication of the traditional statistical tools. But what happens on the next level? What happens when we start gaining the ability to foresight automatically? We can then start setting budgets on what we believe is going to be the expenditure for some specific lines of the business. We will be able to start predicting recurrent spending, and AI will be able to tell you when your rent is going to go up or come down, or what happens to the interest rates, on how you're going to start changing your financial budget depending on external factors, and maybe at some point even anticipate contingencies. This is a little bit of the things that not only we dream about, but we should be committed in this generation to create in order to improve the world. What happens at the next level? Talking about customization. Well, I believe there's going to be an ability to set credit conditions for your own customers, in which you can treat them differently. What we said just a couple of slides ago, the customers are expecting a better level of personalization, of tailoring, and it will be better for just business instead of just giving standard rules and standard conditions for everyone. The same goes for the preparation of payments in advance. In that regard, you could start giving away discounts or receiving discounts from your suppliers if you pay sooner. But instead of just being strong rules, the AI will be able to determine in which moment it's better to give a different kind of discount. And in that regard, start pushing for different behaviors, rewarding and penalizing regarding on what you want to get from your business. I also think there's going to be a way to delegate smarter. So you will not only delegate to AI or to your peers, but some sort of combination could be the secret behind the future of delegation, in which you can start teaching someone how to do budgeting or how to spend with some recommendations based on AI. And not only that, what happens for customization? Sorry, for decision making. Well, we can start determining how we can save in different things. AI at some point will be able to give us almost decisions or suggestions on where do we need to save, which things we need to stop spending on. Maybe buy less coffee from the street and get a machine. Maybe buy from a different suppliers. And for the revenue, maybe you can start giving us a little bit of pricing techniques, which segments or customers have to pay a prime for something, which customers need a discount based on their consumption or based on the kind of product they want to buy most, and time-based discounts in which the AI will be able to set dynamic pricings over the time, pretty much like the automatized price settings that we have already for advertising systems. And finally, at some point, the integration with the AI is going to be as big, as huge, as ubiquitous for everyone, that you will just communicate with the machine and ask him, how much should I budget this month? What do I need to cut my expenses on? Could you please make sure I pay my fixed expenses in the following 2 weeks? How should I spend this extra money that I got this month? So right now it seems a little bit far away, but this is exactly the kind of questions the AI is going to be answering for us. This is not a question of magic. This is just the way coming all the way down from pattern detection, foresighting, customization, decision making, up to interaction with the AI. So when we start seeing all of these things taking shape at some level in every industry, when we think about fintech in particularly, we will see that there is a differentiation on services overall. Some of the information we have from the World Economic Forum mentioned three key aspects on how the service is going to be designed for the present and for the future. So let's talk about the differentiation for attracting customers. Historically, one of the main ways to attract and differentiate was definitely pricing. The ability to set a price would determine how the supply and demand of a product was going to be given. The speed, how easy we could get a service or a good to the market. So the speed was key. The access, not everyone had access to everything, so you could set some different segments, and then play with the price, play with the speed. In order to have access, sometimes it was constrained to go, for instance, for banking, you had to go physically place yourself at a branch to buy a car or to buy computer. You had to go to the dealership and get your objects, check the pricing. Sometimes if you wanted to go to a restaurant, maybe you had to have a specific access to certain places within it, or otherwise you couldn't get access to the menu. What we see now is that these previous differentiation and attracting techniques are just falling, are just getting old right now. So instead of pricing, people is looking for customization. So it's not a standard price for everyone. Everyone wants to be able to choose what they want or not in a modular way, and then define how they want to pay for it. And this is partially one of the main success for software as a service platforms, one of the uh, highest growing internet services, because you can basically decide what you want to pay for. And generally, you just want to pay for the things you use. So customization is definitely going to be a key differentiation for attracting customers in the future. Um, the same goes for this new fight for attention. Everyone is fighting for our attention in every day, with social media, with different apps, with news. Everyone is trying to lure you via notifications, and the same will go for any other services. So even services that are designed to work have to be more comprehensive and how to fight for your attention with all of the competition of a myriad of notification and issues just happening all the way through in our computers. Finally, ecosystems. So this is not anymore an issue of separating, segregating, and having a specific access to different tools. Now consumers will want to create ecosystems. They will want to have interaction between different devices. They want to send content to their TV, to their small screen, to the screen of in a friend's house. They just want to share things, and the creation of ecosystem will be something we will see standardized in the new creation of service models. So the ability not only to customize, gain attention, but create ecosystem with different platforms. That's why APIs have been growing a lot, because people just want to create their own ecosystem according to their needs. This is like a higher level of customization that depends on the interaction of your services with others. So to me, this is like not only the banking for the future, but the service creation of the future. It just took us a little bit more for financial services to arrive there, but the time was just waiting for us. So according to the World Economic Forum, there are some particular needs in the industry that you should think about if you want to address these issues. One of them is the institutions face a prolonged skills deficit. So now it's a lot of information around, and there's a lot of new things to learn, but it's complicated to gain speed to market in terms of learning. So there's this deficit of skills, and you can see how to invest in new technologies and new talent is going to be critical, particularly for AI, because right now there's a big shortage of talent understanding how data works and artificial intelligence works, and some of the people that are already taking incumbent places, they have this resistance to change. So we need to create these skills, to invest, and to be able and open to face these challenges. Therefore, people management will definitely be a competitive advantage. It seems like automatization is only a work for machines or machine related, while in fact, the real enabler of this, it's the the people, the management, the the ability for individuals to embrace these new changes and these current needs. So it is crucial for us as users and as creators of platforms to understand how key and essential is to build teams that are able to learn, that they want to embrace changes, that they want to invest in themselves, and us as companies and creators be able to be open to fund research, to fund learning, to fund people even in time to learn and acquire new skills. And finally, also, the World Economic Forum makes reference to some of the worries related to the growth expected in AI. The safety of the financial system, the global and regional economic growth, which right now it's hugely and severely impacted by the effects of COVID, the protection of the consumer, their information, their public interest. It is our responsibility to train people to look after themselves online, to be conscious of their digital footprint, to be really conscious on how their passwords should be managed and what does it entails, the protection of devices. So the consumer protection, the proper identification of the people, guaranteeing that no virus is violating the accounts is going to be paramount for the building of the future of finance. Um, the worries are the employment of human capital because the skills are each time higher and the performance has higher bars. So we definitely need to keep improving productivity by learning new skills and to be more open to self learning and self assessment. So we as humans are going to be more pressure of the needs of the future. It's just part of the trend. We cannot do anything against other than just try to embrace these changes and work for them. And finally, the experience gathered from other industries that are far more advanced into this is going to be also key to understand how it plays. Different industries have different degree of development in AI. So we need to understand what their learnings are, how they were driven into these, how to make connections to their industries in order to deliver more value in differentiated ways. Um, Thank you so much, guys, for attending this webinar. I really appreciate the Future on Banking for this invitation. Um, this is a little bit of the things that have inspired us in Delta AI to create your digital CFO, a single stop for all your financial and administrative needs. And feel free to take a look at deltaai.com or just send us a tweet or email. We'll be happy to chat with you. Thank you very much and keep enjoying the rest of this great event.